Canadian investors focused on supply chain efficiency can watch Kinaxis for AI-driven recurring revenue signals that may outpace broader tech rotation. This is Modern Investing Techniques, episode 153. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,731, up 0.7%. The Nasdaq Composite closed at 26,541, up 1.6%. The TSX Composite closed at 36,834, up 0.1%. Financials and healthcare led sector performance while technology lagged. The Fed remains divided on whether policy is tight enough, with Treasury Secretary Bessent's push for lower bond yields adding complication ahead of Jackson Hole. About 16 days ago, we picked X.to on an earnings and dividend hike catalyst that closed up 1.94%, showing how volume confirmation can validate rotation plays even in mixed markets. Niche AI strategies in supply chain software convert specialized analytics into higher recurring revenue and customer retention by embedding predictive models directly into client operations. Today's market shows technology lagging the S&P 500 by 7 points, while financials and healthcare lead, creating a window where targeted AI applications may decouple from broad sector rotation. Kinaxis demonstrates this by winning new customers and locking in multi-year contracts through its AI platform that optimizes complex global supply networks. Investors can implement the approach by screening TSX-listed software names for rising recurring revenue percentages and customer acquisition metrics reported in quarterly filings. The strategy has historically performed best during periods of elevated logistics volatility when enterprises pay premiums for predictive accuracy, but it carries execution risk if AI models fail to deliver measurable cost savings. Cross-check any candidate against the 20-day average volume rule before entry to avoid rotation pressure. The same volume filter also protects against the broader rotation pressure that has weighed on technology names, even when individual catalysts appear strong. Canadian investors using Questrade or Wealthsimple can pull the recurring revenue line item from the most recent Kinaxis quarterly report and compare it quarter over quarter to quantify the acceleration. This approach rewards patience because the payoff comes from sustained contract renewals rather than one-time headline wins. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's practice investment is monitoring KXS.to on the TSX in the tech sector. The strategy waits for volume confirmation above the 20-day average on an AI-driven recurring revenue catalyst. The hold period would be 5 sessions from entry if triggered. Invalidation would occur if KXS.to closes below its 50-day moving average on volume exceeding the 20-day average. The catalyst centers on Kinaxis converting specialized supply chain models into stronger recurring revenue and new customer wins. The technical setup shows price action relative to the 20 and 50-day moving averages, with volume currently below the 20-day average. Risk assessment notes the recent cold streak requires the explicit volume filter, with the stop triggered on a sustained move below the 50-day average. The target would be plus 3% to plus 7% if volume confirmation arrives within the weekly window. Confidence sits at low because the catalyst is present, but the volume filter is not yet met. This setup demonstrates the discipline of requiring volume confirmation before entering a catalyst-driven name already in a sector rotation. Yesterday's flash trade on PNG.V entered at $5.72 and exited at $5.40 for a loss of 5.59%. That move came against a Nasdaq gain of 1.6% over the same one-day window, producing negative 7.19% alpha. The earnings catalyst produced a quick reversal once broader rotation pressure hit without volume support. The extracted rule requires volume above the 20-day average before entering any catalyst-driven name already in a sector rotation. Supply chain AI platform screening works by pulling quarterly filings through any brokerage research portal and tracking the percentage of revenue labeled subscription or recurring. The technique suits intermediate Canadian investors comfortable reviewing filings on the TSX and can be run weekly to catch acceleration before it appears in headline price action. Federal policy monitoring via official releases lets investors track Fed and Treasury statements through primary sources such as Bloomberg transcripts to anticipate shifts in long-term yields before they fully reprice risk assets. Access is free via the Federal Reserve website or Bloomberg terminal summaries, and the current division within the Fed on policy tightness creates a narrow window where yield-sensitive names may move ahead of broader equity rotation. A U.S. judge ordered the Trump administration to remove its ban on Anthropic AI tools for federal use, reopening a major government customer channel for the company. Add Anthropic-related exposure via public AI infrastructure names to the watch list for potential contract flow catalysts. Bill Gates described the shift to widespread AI as one of the most turbulent periods in human history, even under best-case assumptions. Maintain diversified tech exposure rather than concentrating in single AI names until earnings visibility improves. A 60-day memorandum of understanding signed with Iran removes the U.S. blockade and guarantees safe commercial vessel passage through the Strait of Hormuz. Trim energy holdings if crude prices fail to hold above recent support after the announcement. Wages and salaries fell to roughly 43% of gross domestic income in the first quarter of 2026, the lowest level since the 1930s. Favor dividend growth names over high-wage cost consumer discretionary stocks until the ratio stabilizes. Portfolio performance across 57 total simulated trades at a 53% win rate produced $250.04 in cumulative profit and loss. The matched window alpha versus NASDAQ stands at negative 5.44% across 6 rules-based trades. Average return per trade is plus 0.44%, with the best trade at plus 20.11% and the worst at negative 11.80%. The record began on August 18, 2026, under the published rules of fixed 5-session holds with entry at the next open. Imagine you bought a high-growth U.S. tech stock in your TFSA last month at $48.50, and it rallies 18% by year-end. The contribution room you used stays intact, but the entire gain compounds tax-free inside the account rather than triggering capital gains tax outside it. The mechanics hinge on annual contribution limits that reset each January, with unused room carrying forward indefinitely, yet over-contributions trigger a 1% monthly penalty on the excess until withdrawn. Professionals always verify the exact unused room via the CRA's My Account portal before allocating new capital, especially when shifting from cash holdings into equities. U.S. dividend withholding tax still applies at 15% even inside a TFSA, so Canadian investors often favor growth names or Canadian-listed ETFs to minimize that drag. The common misconception is treating the TFSA like a high-interest savings account. The fix is to allocate the full contribution room to assets with the highest expected after-tax compounding potential, given your risk tolerance and time horizon. Another layer is the superficial loss rule that still applies inside the TFSA, meaning an investor cannot immediately repurchase a security sold at a loss and expect the loss to reduce future taxable gains outside the account. Tracking adjusted cost base becomes simpler inside the TFSA because all gains and losses stay sheltered, freeing mental bandwidth for security selection rather than tax accounting. For investors with $50,000 or more in room, allocating half to a broad Canadian equity ETF and half to a concentrated growth name has historically produced stronger long-term outcomes than parking the entire balance in cash or GICs. The annual reset also creates a natural January rebalancing window where investors can top up without worrying about contribution limits being exceeded mid-year. Before we wrap, open your brokerage platform and check whether KXS.TO volume today exceeds its 20-day average. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow, and if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. This show comes to you from the NARA Network. If you want another sharp daily briefing, Planetarian Daily has you covered. Daily breakthroughs in science, health, and longevity. All our shows are free at naranetwork.com. New to the network? naranetwork.com Start Here picks the right daily briefing for you in about 2 minutes. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?